health insurance costs are about to get even more expensive, and in 2026, ACA Marketplace premiums are projected to jump an average of 20% nationwide, with some states seeing increases of 30% or more. Now, that's the biggest spike we've seen in nearly a decade. And if you're self-employed, a small business owner, or paying out of pocket for your health insurance, you're the one shouldering that cost. Now, here's the thing. Something you may not know is that you don't have to stay stuck in that system anymore. There are alternatives, and today I'm going to be sharing 2 strategies that I personally have used to help my family save thousands of dollars every year while still getting the health care that we need. Okay, so let's talk about what's actually happening first. When I say the ACA Marketplace premiums are projected to rise by 20% in 2026, here's what that means. Every year, insurance companies file requests with state regulators saying how much they want to increase their prices for the upcoming year. These requests are based on the company's math. They're looking at what they expect medical care to cost, how much people are using healthcare, and what they think they'll have to pay out in claims. Now, at this stage, these are proposals. They're not the final numbers. That's why we use the word projected. So is it official? Not yet. Now, state regulators still have to review and approve those requests. Sometimes regulators approve the full increase, sometimes they lower it a little, but historically, the final approved rates are usually pretty close to what the insurers originally filed. So when we say premiums are projected to rise by 20%, it's basically saying if nothing changes and if regulators approve what insurers have asked for, then that's what the average increase will be. Now think of it like a builder submitting an estimate for a project. It's not the final bill yet, but it's a really strong indicator of what the costs will be. So with these projections, some states will see small increases in the single digits, but others like Arkansas, Delaware, Mississippi, and New Mexico, they're seeing proposed hikes of 30% or more. On my website, I created a state-by-state interactive map that shows these changes. If you're on YouTube, you can check out the link below. If you're on my website, just scroll down and look. And as you'll see, unfortunately, there's a lot of red this year on the map. So what's driving these price hikes? When insurance companies file their rates, they do have to give reasons. And here's what keeps coming up for 2026. Again, this is their reasons, not mine, okay? First, they say medical prices just keep climbing. Hospitals, doctors, outpatient clinics, everybody's charging more, and those costs end up in your premiums. Second, people are apparently using more care than they did a few years ago. So a lot of folks delayed checkups or procedures during the pandemic, and now they're finally going in, which means insurers are paying out more. At least that's what they're saying. Third, prescription drugs are a huge factor. So medications like Ozempic and Wegovy, they cost $10,000 to $15,000 a year, with an average of around $1,000 a month per patient, and the number of people using them has exploded. Specialty drugs in general are one of the fastest growing expenses. Fourth, labor costs. Hospitals are short on nurses and staff, so they're paying higher wages for overtime. And when they negotiate with insurers, they demand higher payments, which trickles down into your insurance premiums. And finally, the risk pool. If younger people drop out of the ACA Marketplace because it's too expensive, it leaves an older, sicker group, and that drives average costs up even more. Now, putting all that together, you can see why insurers are asking for the biggest premium hikes we've seen in almost a decade. And again, this is from the insurers. This is what they're saying is their reasons for increasing those prices. Now, let's talk about how that's impacting the average family here in America, because these aren't just numbers on a chart. If you're paying $1,200 a month right now, a 20% increase means that your bill jumps to about $1,450 a month. That's an extra $250 every single month, or $3,000 more a year. For the exact same plan, you're not getting more for that additional cost that it is for you and your family. And let's think about what that actually means. That extra $250 a month could have been going towards groceries. It could be part of a car payment or money set aside for savings. For many families in America, that difference is huge. And I see people all the time asking, well, what's the worst that could happen if I just don't have health insurance? Now, they're not saying that because they don't care about their health or their family. It's because they've done the math and they simply can't afford it anymore. But of course, the flip side is also scary too. If something major happens, like a surgery, an accident, a super expensive, $100,000 hospital bill, very few families could handle that on their own. That's why we feel stuck. We know we need something, but traditional health insurance just keeps getting more and more out of reach. Now, the good news is you do have options. There are options out there. Most people don't know about it because they don't have big corporations paying for ads all day, every day. But here, we're going to be talking about what you can do about this problem. Okay, so one of the best alternatives out there, something to consider, is direct primary care, or DPC. Now, this is how it works. You find a local doctor, and this is a monthly membership to your doctor. So instead of paying the insurance company, you have a flat monthly fee that gives you access to your doctor. We're talking unlimited office visits, same day or next day appointments, much better healthcare access. Typically, they offer 24/7 access by phone, text, or email, and you get much longer visits with your doctor. So we're talking 30 minutes to 60 minutes instead of those rushed 7-minute appointments that you might be used to. Now, here's why this is such a big deal. In the traditional insurance model, doctors are overloaded, overworked. They might see 30 plus patients a day just to keep up with billing requirements. Every decision is influenced by what the insurance company will or won't pay for. But with direct primary care, insurance isn't involved at all. That means that your doctor actually works for you. They can slow down, they can listen, they can focus on health instead of fighting through mountains of paperwork. And the savings can be incredible. So most DPC practices offer wholesale pricing on things like labs, x-rays, prescriptions, MRIs even. Our family has been able to get lots of blood work done. Something that would cost thousands of dollars is only hundreds of dollars. Things that are hundreds of dollars is only like, oh, this is $15 instead. It's been fantastic. And DPCs are a lot more common than you might think. These clinics are popping up all over the country, and I'm really excited about it. I've actually helped people that live in smaller towns find multiple DPC doctors nearby, and there's new practices that are opening up every single month. To me, this model is the future of healthcare. It brings back that old school doctor-patient relationship, gives you real access when you need it, and keeps costs low and predictable. And this model is better for doctors, and it's so much better for patients. So we've covered everyday healthcare with direct primary care. Most DPC doctors, I just want to say that they'll say about 90% of your healthcare needs can be taken care of and resolved through your DPC doctor. So it's fantastic. Okay, but what about the big stuff? Surgeries, hospital stays, emergencies. That's where a HealthShare comes in. HealthShares are nonprofit communities where members contribute a set monthly amount. Those contributions that you send in each month, those are then used to help pay for each other's large, unexpected medical needs. So your monthly amount is going to be based on things like your age, whether you're joining as an individual, a couple, or a family, and by how much you choose to be responsible for before a HealthShare steps in. So for example, if you pick a $1,000 responsibility amount, you pay the first $1,000 of an eligible medical bill, and then the HealthShare community helps with the rest. Now, here's why HealthShares are very different and honestly refreshing, okay? They are not insurance. And I have to say that over and over again for legal purposes, okay? HealthShares are not insurance. And honestly, that's kind of the point. That's what I like about them. With insurance companies, they make money when they say no. With a HealthShare, it's quite the opposite. They are designed to pay for your medical bills based on the member guidelines that each HealthShare has. With a HealthShare, your money goes further. Also with a HealthShare, you can see any doctor you want. So you can choose your DPC doctor or someone else, but there are no network restrictions, and that freedom alone can give you an experience that is so much less stressful and much more enjoyable. And as I've said before, HealthShares are affordable. They have less waste, no profit motive. Monthly contributions are often hundreds less than what you'd pay for health insurance. And for many families, that adds up to thousands of dollars saved each and every year. Now, HealthShares aren't for everyone. You do need to be under 65 years old and relatively healthy. Now you can join a HealthShare with a pre-existing condition, but in the first year of membership, they do not pay for any medical conditions related to a pre-existing condition. And then every year after that, there are some limitations for the most part. So that's why I say they're really great for people that are already healthy and under 65 years old. Now, for the right person, this is pretty amazing. So instead of pouring money into a system that denies, delays, and frustrates, you're part of a community where your dollars actually go towards paying for medical bills. And that's why health shares are becoming one of the most powerful alternatives to health insurance today. So here's the bottom line. Health insurance premiums are rising again. Families all across America are feeling that. And for many, it feels like there's no way out. But the truth is, you don't have to stay trapped in that system. Direct primary care puts the relationship with your doctor back where it belongs, with you. It's affordable, personal, and focused on you, not an insurance company. And nonprofit health shares give you a way to handle the big medical events, the hospital stays, the surgeries, the unexpected bills, without draining your savings account or burying you in medical debt. Together, these two memberships are helping families save thousands on their healthcare costs. It's allowing them to take back control of their healthcare and finally breathe again when it comes to the costs. And I realize this isn't just a small tweak, it's a completely different way of approaching your healthcare. And once you see how it works, and you made the change, you'll wonder why you didn't make the switch sooner. If you're ready to explore a different path for your healthcare, I've put together a free guide that explains exactly how health shares work. I talk about the benefits, the limitations, and what to look for before you join, because not all health shares are the same. You can grab it in the link below in the description box. Because healthcare shouldn't be confusing, frustrating, and overpriced. It should be simple, affordable, and built around real people helping each other. So download the guide and take the first step toward a better healthcare experience.